Steve, Jamie, how's it going?
Hey, Scott. Bro, Steve, what's happening over there, my man? Happy Monday.
Happy Monday to you. Not a whole lot. Can you hear me? Do we lose Jamie? Jamie?
Okay,
Uh-oh.
sorry about
There
that.
you go. There you
I
go.
don't know what happened there. Somehow my
Floyd,
uh,
bit your cord.
my secondary button got pushed. I don't know how that happened. Very crazy. In any case, hopefully you can hear me now.
The cat did it.
Uh, yeah, Floyd, blame it on the cat. In any case, welcome to another edition of the Office Hours. Today is October 21st. So October's about 3/4 of the way done. Wow, time is flying. Want to thank everybody for attending today. And without further ado, I guess we'll just get right along here to the disclaimer before we get going. Attendance, whether it's this webinar, sell it, all that good stuff, please seek out a registered investment advisor or somebody like a registered Series 7 stockbroker that can legally dispense that type of advice to you. So once again, educational purposes only for all of our Trade Ideas webinar content. Always like to take just a little bit of time at the top of the hour here, hosted by Mr. Barry Anderson. The trading room is a very good place to go and learn and communicate with other experienced traders. You're going to have people from all skill sets in there, beginners, people that have been doing it for a while, and people that have been doing it for a very long time, like Barry and some of the other senior guys in the room there. So great price, our trading room, $0.00. If you've shopped around the web for trading rooms to hang out in, you know that most of them are not free, and even the ones that charge a pretty penny, going to have a hard time competing with what we have going on with Barry. So if you haven't been taking advantage of our trading room, get in there and do that for sure. For the rest of the week, the 5 p.m. Eastern webinars is what you see right here. Of course, you get myself and Steve on Monday. Steve's going to take the steering wheel on Tuesdays for the trade of the week, and Andy's going to ride shotgun with him. We got Q&A demos on Wednesday. I'd like to change it up a little bit and bring in Dan MIRKIN and Brad Williams, respectively our CEO and founder, Dan, along with our Chief Technical Officer, Brad Williams. Always like to show you new things that might be coming down the pipeline. Of course, I'm going to steal a little bit of their thunder today because you may or may not know this, but paper trading is out and downloadable in the latest beta version. So that's what we're going to be talking about today. Thursdays, Andy's going to round out those 5 p.m. Eastern webinars. I ride shotgun with him. And then Friday, we like to change it up a little bit. The old Friday support session, which starts up at 11 a.m. Eastern, and depending on the crowd, usually a 2-hour minimum. Sometimes we take it the full 3 hours if the crowd is rowdy enough and participating. So all in all, that's what we have going on for the 5 p.m. Eastern webinars. And we also have the whole TI University series of educational webinars. Really good for getting over the learning curve quicker than later. 101 Mondays, 201 Tuesdays, 301 Wednesdays, followed up by 401 Thursdays. Once again, these all start at 12 p.m. Eastern. The content is pretty static, meaning it all is the same. 101 is always the same. 201 is always the same. So we do recommend, if you do have the luxury of attending these in the live format, that's always the best way to go, because you can get your questions answered by the educator that is in there hosting the TI University segment. But we know that some people have pesky things like jobs that get in the way of attending these in live format. So if that's the case, you can always go to our YouTube channel. You know, we've got all these fully recorded, so you can watch them over and over again. And once again, that content stays the same. And if you have any questions, if you do have to watch the pre-recorded version, you can always use the info at trade-ideas.com to send in any questions that you might have once you cover all that content. So all in all, 9 webinars coming at you every week, so take advantage. Always also like to show how the crowd or our user base, maybe users that have not become users yet, become users because of the AI, and that's what the chart here is indicating. People are liking the AI. The AI has been doing quite well as of late. Of course, we introduced the first module back in the beginning of 2016. And here we are almost at the end of 2019. So 4th year online about to end, and we'll see what the data shows once this year ends and we add that second or that last bar to the graph here. Now, in addition to the AI and people liking it and responding to it, we also have introduced Brokerage Plus a while back, which allows you, if you're an IB client, to use our B Plus module to interact with the markets and execute your trades. Whether it's a manual trade or whether it's an AI trade or maybe an auto trade that you drummed up from a strategy using our back tester. You can see here live transactions being pumped through Brokerage Plus and being executed at Interactive Brokers are on the rise, as well as demo orders filled, because people typically just don't like to jump in head first. They're going to run in demo mode for a little while, get comfortable, and then a lot of those demo tickets actually turn into live fills. So that's what you're seeing in this graph here. So we'll see how this quarter pans out. Be interesting when the next bar is added to the chart there. Okay, so as I said earlier, Brokerage Plus is now, paper trading mode in Brokerage Plus is now available, and the beta release went out Friday. I think we've already released a new version. It was 0.106. We're already on 0.107. So you can go pull that version down from TradeIdeas.com, and be able to use the paper trading functionality. And we're going to talk about that today after we get through the first part of the presentation here. So Steve, if you're ready, we can take a look at the big indices squiggly lines.
The footprints in the sand.
Yep. I'll kick it over to you real quick.
Yeah, it is kind of quick because there's nothing really major that has changed since we last spoke. When we did last speak, kind of reminds everybody of the tale of the last few months here. You know, no bear case to be made there. Hard to make a bull case down here. Let me get back to, oh geez, looks like the bulls are back in control. Back to, okay, looks like the bears are back in control. So we're literally just kind of playing these stepping stones back and forth across this blue line, being the 50-day moving average. You know, my good friend Brian Shannon is going to speak this weekend at the Trade Ideas Summit. If you can't make it live, it'll be on streaming free, real time. But he just has a great rule of thumb, and to the health of an index or the health of a stock technically is where is it in relation to the 50-day moving average. And so, you know, it just so happens that I was kind of more bullish up here when it was above all the averages, especially the 50, and then a bit more cautious under the 50. So that's really been the stepping stone tale of the last 4 or 5 months here, going back and looking. So back here we are again. So what do I like to look at? Well, geez, we got a cross of the 10 over the 20 there, very bullish. The 20 is above the 50, and so on and so forth. So these moving averages are fanning back out, and they're going to start to be very supportive again. And the price action is going to be very interesting when it touches that 10-period moving average, because what we have is we're back in the camp of, you know, is it a cup and handle within a handle? A double cup and handle? I mean, that's really what it's shaping up to be. When we flip these charts upside down, we say, you know, the chart is trying to find the spot in the ice before it breaks to the downside. Well, you know, just flip that concept upside down for the bulls. The bulls are looking at the upside, and we keep coming back with a little bit of a higher base camp, a little bit of a higher base camp, and that's what you really need to finally have enough strength behind to push through, and the more importantly, close as we get through. Andy has talked a lot, and he's definitely right. You know, the fact that lately when we get up here near these levels, the price action gets chicken. I mean, it literally gets chicken. Tried a second time there, and boy, that second failure really had a lot to say about that. Well, now we're back again. We're going to try it again and see if we can move this time. But the most important thing would be just a really nice close with conviction above, you know, for a couple days. Then that's going to be something that we haven't seen before. It was a horrible line. I didn't mean to draw that there. So that's really what I'm seeing for the moment. The price action all of a sudden is going to be supportive again in these moving average zones here. This is a very bullish scenario. We'll make a bull. There's the bull. Those are his horns. So that's the SPY. Again, going off last week, I think I mentioned before, you know, we had kind of a wedge that we're building ourselves into, okay? when you resolve yourself outside of a wedge like that with a gap and then hold that gap, that's when you start to look back in history and go, oh wow, that was a breakaway gap. You don't really know it this day or this day, but the more days you start to record outside that triangle, that initial move, that initial gap, that power move outside that range is going to be probably very significant when we look back, if we keep going higher. Let's take a look at the NASDAQ and the Qs. Tech-laden Q is very much closer to its all-time high. Also got kind of a cup and handle within a handle going here. Very bullish action. Let's see, let's delete that. Again, just like the S&Ps, all the action is just taking place in a very supportive environment here. This is like a very, very supportive little environment here inside the circle that I have drawn. Oddly, I did look at the IWM earlier. IWM got ahead of itself a little bit. It's been trying to play catch up, but still the one big stick in the mud, this giant range. Forget this little volatile, crazy spike we had down here. The range of the IWM is still something that remains very much unresolved. So we'll draw these lines again. Just to remind people, we're still smack dab in the middle of that range. It will also be very bullish if the IWM can find its way out of this range at some point, because that will mean more than likely that there is a confirmation of the move higher, and the big guys, the big money managers that have to manage tens of billions of dollars, they're going to start looking for separation and rotation into something that is lagging, and that would be these guys right here, the small caps. So once the market feels safe and the herd feels safe again, I wouldn't be surprised to see some bottom fishing in the small caps, but at the moment, we're right smack in the middle of this range here. There's nothing really to talk about. And then lastly, the Dow had a funky candle in there, but I don't know what that funky candle was all about. I think it's a bad tick. But still, same kind of situation going on over here. Just a cup within a handle, Very bullish setups across the board. This week's trade of the week was interesting. In Lyft, there was no target set. There was no trigger, there was no trigger. It just said, buy on the open and don't let the thing close below the 10-period moving average. Well, talk to Andy and the guys midday today. If you got in, you got in at your own price. But what I expect is at least another day or so, maybe a day or two, maybe tomorrow's the day. I'll tell you what, if we jam down on the open tomorrow and put a spike right down there into that 10-period moving average, which is going to come up to meet it, that usually is, I'm starting to name this the bird in the hand trade. We have a downward trend that's been broken, and it's been broken by the 10 period is going to cross the 20 tomorrow, so you want to see that cross, and then that 10 period becomes the level of support, kind of like a flat line, like you lay your palm out with a bird on it, and the price action would be the bird, and hopefully bird in the hand flies higher. But it's a little premature here today. It's a little underbaked because that hasn't crossed yet. And what I really like to see, and I go back to this, algorithms run this market, and algorithms have to hit their bogey and hit their target so they can if, then, and reverse in their equations. And a lot of times I feel like that jam down open in the first 10, 15 minutes where all the stops are run, and they spike down and they clip that 10-period moving average on the daily chart. That is usually the go signal that I think it's time for something like this to take advantage. So I bought a little bit. I'll watch it. This is a perfect scale in type of an entry. Watch a little bit. If it does do that and goes down and tags that 10 period tomorrow or the next day, that might be the trigger for me to buy the second lot and move out of it from there. But a little bit more on that tomorrow. And Jamie, I just wanted to kind of talk about that because it was kind of a different trigger than usual, but we'll talk more about that tomorrow in the Trade of the Week webinar.
Now, is Uber looking very similar as well, or are they decoupled?
Not really. Uber, I think, is not as healthy. I think I'll tell you why, because look at that downtrend. Here's where the rubber is going to meet the road. It got ahead of itself. We can all agree it definitely got ahead of itself, which is a good sign. We'll give that a plus. But what it did is it ran right smack into this declining 50, which I just spoke about 5 minutes ago, which is the overall health of the trade. So these algorithms slammed into the 50 and said, take profits and or short, whatever. Mm-hmm. But what's coming up underneath, there's our cross on the 20 and the 10, and that 10 period. Maybe the next day or two, Uber spikes down, tries to run some stops at there, and then bounces back up. If it can bounce back up and then close above that 50, then Uber's in the same ball game that maybe Lyft would be. So they're close. I mean, they're very close. I shouldn't have poo-pooed it so quickly. I just remember when I looked at it, I just saw it slamming right into the 50 period. But the bullish case is coming up right underneath. So we're going to find out probably pretty quickly who's going to win in the Uber battle as this is going to be resolved coming up.
Yeah, good stuff. Right on.
That's all I got.
Okay, thank you very much, Steve. Good stuff as always. I'm going to grab it from you. Get back over here. Okie dokie, you should have eyes back on my screen here. So what we're going to do here is we're going to talk about Holly. We're going to talk about the risk off and risk on spread. We had 3 or 4 good different plays here of when Holly is exiting the trade, and there was a little bit more meat left on the bone, and we're going to take a look at all of those as always. We're also going to take a look at exploring the paper mode and Brokerage Plus as a whole, since it is live now. And once again, remember, it's available to everyone, whether you're a basic subscriber or a premium subscriber. The main difference is you won't have access to the AI trades if you're not a premium subscriber and automation from your own strategies. But the basic functionality will be available to everyone, and then the advanced functionality for the premium subscribers. So we'll get to that here in just a little bit. Pretty cool stuff going on with Brokerage Plus and paper trading. But first, let's go ahead and talk about a little bit about today's market action, what the expectations were in my world after the first 15 minutes by referencing our favorite compare count window here. So here we have the compare count readings after the first 15 minutes. And of course, not only do we have a reading to the bullish side north of 55%, but creeping on up into the 60s, which doesn't happen very often. You know, Steve and I and Andy and Sean have been around for so long. One thing you'll hear, one thing I've heard throughout the decades, right, is a lot of traders are like, you know, there's 2, 3, maybe 4 days a month where things really do trend. Now, sometimes the trend is a lot more obvious. Sometimes it's like today where, you know, after the first 15 minutes here, which was this little upside down doji candle here, we did kind of gravitate back down, just bouncing off these levels here from the prior close as we eked on down. Didn't even get really, you know, did not touch that 10 period before putting in the bottom there about 45 minutes in, and then we can see what happened for the rest of the day. All right, you know, distance between here and here isn't a huge amount, but clearly, you know, once we put that bottom in, it was just up, 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 flattened out for a little bit, another push higher, and then on into the close, which, you know, from a trader's perspective, I'd rather see this type of action, just slow, steady grind to put in those new highs at the close. That's encouraging, looks bullish, and then when you put that on top of what Steve just showed us, hey, looks like we might be hitting those all-time highs again. I guess the big question is, will it be a triple top and go back down, or will we break out? Hopefully we're going to push on through, and maybe, who knows, we might be in a trending market again, ladies and gentlemen. We will see. Getting exciting. The rest of the week's going to be very interesting. So the bottom line is this, you know, massive readings to the upside. Of course, that's never a guarantee, but we can see what happened for the remainder of the day. So what does this tell us? When we see these after the first 15 minutes, might be a good day for some stocks to have some follow through. And that is exactly how things pretty much played out for the overall market and Holly as well. Now, let's just go ahead and take a gander over here at the totals. You know, we got 200 and change here based on 100 share trade size, a little over 100 and change on 2.0. I can't quite remember. We were up significantly more, as we can see from the little P&L graph here on NEO before that module pulled back a little bit. But I do recall seeing total points or total value over here at one point was up around 400 and change, but into the close only settling down a little over 300 or 330-ish or whatever. So it gives a little bit back, but a very strong day nonetheless from Holly. So some pretty good percentage movers in here. Now, if we focus on the column over here, risk on percentage, you know, what do we got? A 5.83, 2, 5. We got an 8%er down here in SDKL into the close. So, you know, Holly's really coming back to life. You know, we had a little rough patch there when the market was doing its gyrations, but Holly's back on her A game as of late. So want to point out the risk on, risk off opportunities that were there today. But first, let's take a look at this STKL being the big percentage gainer. Just want to go ahead and look at that one first. Of course, it was a smaller dollar stock, and we can see right here, Holly puts in the buy signal at $1.37, and then what we top out here? Topped out at about $1.50. Draw a little line right there. So that was the high. But if we look down here, Holly played it pretty well in risk-off mode, but could have made basically another 50%, 8 cents versus 12 by holding into the close. So a really decent percentage gain of 8.76 holding into the close on STKL. Let's check out the float on that one. Not a bad float for a low dollar stock, 86 million shares in play. Of course, when we see a stock like this come across, and whether you're looking at your single stock window or maybe another window that you got to play from, maybe it's Holly, maybe something else. Of course, it was Holly generated, but check out that relative volume number. And this is the closing value. We can see here, thing usually only kicks out a little over 400,000 shares on the 3-month average. It almost did 10 times that amount. All right, almost 4 million shares with that relative volume of 9.25. So when you see things like this, whether they're Holly or any other window, of course, the lower time frame volume levels were off the hook all day. You know, that should tell you something that this one, look, if it looks good and you're comfortable with the risk, because of the jet fuel, that's the volume that's pumping through it, you know, it might have some staying power. Now this one was generated pretty late in the day, towards the close here, all right, which is uncharacteristic. But another thing I like about it is a little laggy here. Right when we got the signal, you know, we were just below this range break that occurred shortly after, and really after that level was breached, that's when we got the biggest lift of the day. All right. So once again, a nice Holly play with a secondary pattern looming shortly, you know, and that was before, you know, that pattern did not complete until we got the signal. So interesting to say the least. We got the statistical probability that Holly's bringing us. We got the massive volume, and then we've got a secondary pattern that may have played out. We never knew at this time, but it worked beautifully. Taking a peek at the daily here, just popping up to the top of that range. Just a very solid trade all the way around from a late day trade from Holly. Now let's take a look at some of the risk on opportunity, the difference between when Holly closed out the trade in risk off mode and what we have showing in the column towards the close here. So first on the list here, FSCT, really clean buy signal, really clean chart here as well. Once again, check out the volume levels that this little guy finished at today, 3.44. 5-minute volume in the lower time frames were also staying pretty chock full during the regular session. So I like this a lot because we got the downturn here, we got the wick put in, next 30 minutes we get the buy signal from Holly, bottom's already been put in. Pretty tight stop on this one, just kind of lining up a little bit less risk than the low there. But we have the same type of thing playing out here. Once we get this buy signal from Holly, boom, 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 just, you know, small lift, never really going even back down to the entry line here, which is always a good sign. Of course, my eyes are drawn to this level here. And once again, secondary pattern playing out on top of a highly probable signal that Holly's given us. Once again, we got massive volume flowing through this thing. And what happens once we get up here? We peck through this level and then we push higher. Take a little bit of a pullback here, just kind of nuzzling up to that 10 period before basically reiterating another range break up here and just a slow grind up. Just a beautiful trade all in all. Holly gets her target hit. Hey, there's nothing wrong with target hits. Everybody likes it when a target gets hit. Only caveat is once we took this little pullback here, there was more meat left on the bone. A little over, we could just call that 58% more than what Holly made on it. So once we see her calling the exit here, on this one, it's the best of both worlds, because if we peeled out a half with Holly up here, set that break-even stop, would have kept us in for the remainder of the day, and we could have, capitalized on that additional 50% more favorable on the gain there. And then, of course, this one finishing almost 6% up on the day. Notice over here, it's tallying up all the risk on. So if we see here, risk on, total of 16.79%, just tallying up all the winners and the losers over here. This one a little bit more obvious. This we had a 50% more. Well, this one a lot different, because Holly booked a 2-cent gain. Of course, there was no target hit. This was a timed exit. This one just took its sweet time working here, but work it did in the end. So Holly calling the buy right here at the 31.80 level, kind of vacillating and just flatlining right here. Classic timed exit right here. This also looks very similar to what patterns sometimes will look like in a reduced risk or a profit save mode. Nonetheless, it's a little bit of sideways movement here, but slowly etching out or slowly inching up, which leads me to believe that's why we didn't see a reduced risk, or in this case, a profit save, because we had this slow grind here going up, not just flat. But in any case, the timed exit rolls around. Holly just does what she's programmed to do and takes her 2 pennies. But, from our human eyes here and the action that unfolded after the play was initiated here, notice that once we come down here and kiss the entry line one more time from that entry, we never really go down and meet it again, well above the 10 period. And once again, a nice little secondary pattern playing out, or potentially playing out, which it did eventually here. Of course, it didn't bust through, and it wasn't as an aggressive of a move up as the other two that we've already looked at. But hey, that's fine, because took its sweet time here, hugging that 10 period, and once these levels were breached, a great time to add to the position as we creep around these new levels here as we set these higher highs. And took its time, about an hour, plenty of time to pile into more before we got the bigger move of the day going into the close here. Break-even stop would have been a little bit more precarious on this one. Hard stop would have kept us in no problem. But all in all, just some very nice, steadily increasing trades and some risk on, risk off opportunity from Holly here. ED, all right. Consolidated Edison, buy signal right here at 92.05. This one not acting quite as nicely as the other ones. Definitely would have had to have stuck to the hard stop here. We get a really nice lift here, and we come back down and crash through the entry line. On this one, timed exit, once again, Holly makes it for the duration. Leaves a little bit on the table from the highs up here, 92.46. She gets, lets about 20 cents slip away. But 20 cents nonetheless is what she booked. Obviously, if we would have kept half the lot and used a rollover stop on the break even, this one would have tagged us out. All right, so we would have made money on that first lot, got zeroed out on the second lot. Only way you could have really taken advantage of this one was just to have stuck to your hard stop here. So this one not acting near as nice as the others, but if you had a little bit more risk tolerance and stayed in the trade today, you definitely made about triple what Holly did, 20 cents versus 63 cents. And lastly here, Suave. All right. Hey, Steve, you know what that reminds me of right there? Motor. But similar right there, Motor. Got the Geico commercial we're always talking about.
The best one is when the best one is when he says, "No, you mean like legs on the bottom, motorcycle on top?" The guy goes, "Yeah, I can see that."
Gasoline. Okay, Suave. This one, once again, we had two or three that just went immediately. Not the case with Suave. We did have to sit a little bit of pain here. Buy signal coming in at 33.63, and right after the entry, just immediate push down. This one would have, once again, we would have had to stick to the hard stop, but after we see these 15-minute candles kind of closing below that 10 period, this is one of those that could have went either way, depending on your risk tolerance. Wouldn't fault anybody for bailing out of this one after these two candles are put in here, but guess what? No hard stop. Got close, but no cigar. Reclaims the 10 period once we get up above here and just kind of cycles on for the rest of the day. So what do we got here? 56-cent spread since this is negative here. So 21-cent loser versus 35 cents holding into the close, but definitely not, hindsight's always 20/20, of course. So this one, only sticking to your hard stop is what would have kept you in this one. So that's about it for the risk on, risk off spread. As we can see here, it starts to deteriorate once we get past the swab trade here. But all in all, a very strong performance from the AIs known as Holly. We still plan on consolidating the feed here. Eventually, this will just all be one Holly. But for right now, we've still got the individual modules. But not a bad day from Holly. Total trade count here of right at 33, I believe. So once again, I do feel compelled to mention the commissionless trading because, keep in mind, ladies and gentlemen, as you move forward and you start to experiment around with the Brokerage Plus, we used to have to overcome slippage and commissions, but now with the models and the race to zero, well, that kind of does away with commissions. So in the future, once we're all in a commissionless environment, then really the only thing that we have to contend with is slippage. So,
I was thinking today, one of the bigger benefits would be for the gray box type traders, meaning the people that like to get the AI signals and then they look at them and they either go yeah or no. See, that wasn't really advisable back when you had to pay, $10 in and out to go yeah or no on all the trades, where now you can. And so a gray box trader is somebody that likes to have discretionary decision, but they just don't know where to look. And so the AI can start spitting out really good ideas, and then they go through the filter of your mind, and you're like, oh no, forget that, boom. That didn't cost you anything. That wasn't really a commission. So that's a big deal right there.
Yeah, and that reminds me also, Steve, back in the olden days, when there was the SOs trading and all that good stuff, we had a guy come into the office that would, I think he was from Daytech or whatever. I can't remember the guy's name, Omar, I want to say. In any case, back then, commissions were ginormous compared to today. I mean, what, 15, 20 bucks a side, But he did bring up a good theory back then. He's like, hey, we could throw out offers on this other network called SelectNet. He's like, okay, take the offer. You see a stack of offers that say 10 bucks. It's just like a million of them. So, if you had to cover, you could just hit those 10s. But we could throw out another order on this SelectNet, and sometimes you just get hit on the offer, even though there's 20 offers sitting there. And that would give you a little clue that they're buying, right? Even though they're not taking out all the offers that we saw on the level 2 back then. So that would be like a little tell, okay? All right, well, they're buying on this other network, but they're not taking all the liquidity yet. That could give you an idea of what might happen for future price action. So yeah, what you're saying is exactly true, Steve. It's just a little bit different here because, well, we're not in that same market anymore.
I miss those days.
It ties into what I'm about to talk about here from a methodology type perspective. But let me not lose my train of thought here because I'm easily distracted, as we all know. Shiny things, stuff like that will get me thrown off my game here. So let's talk about paper mode. And by the way, you can download the latest beta version, and when you pull up Brokerage Plus, you'll automatically be connected, as you can tell from your little green bar up here. Of course, we can disconnect and reconnect and all that good stuff, but you should be connected automatically. So now you don't have to have that IB account and jump through all the hoops and pay for the data and all that good stuff. Everything is turnkey right here in Trade Ideas and Brokerage Plus now. So what you're seeing today is a little experimenting I was doing around with just a certain one strategy. Notice the strategy name right here, my 250 short, which is fading stocks hitting 250-day highs, which has been holding up quite well. But, on a day like today, when I saw those massive compare count readings, I'm thinking to myself, I should probably invert this one today. But then again, I thought to myself, it doesn't really matter because I'm going to glean the data based on whether or not I run it short or whether I run it long. I'm still going to get the data I need to, to help me learn, right? So you can see I just let it take 20 trades from the strategy. And then if you see discretion, these are ones that either I submitted myself, like the Hal and the Dove. I was looking through my ticker over here, and I saw Dove earlier in the day. I'm like, okay, Halliburton and Dove. So notice when I click on these windows, it automatically populates all my fields down here. So if I pull up Halliburton and it looks good on the chart, all I have to do is hit buy. It's going to run a market buy, or I can hit a limit buy. All right. So that's how easy it is to execute from any window that is trade ideas, whether it's an alert window or whether I click on something from Holly. It's going to populate that field, and then I can decide whether I want to interact with it or not. Okay, it's just as simple as that. Now, of course, compared to the IB model, it's heavenly because, well, the trader workstation is not the most friendly, but on here, no matter what window you click on, it's going to load the data in here, buy, sell, all that good stuff. In addition to easy buying and selling from a manual perspective, once we do have a position on the blotter and we want to work out of it, we've got all these buttons over here: flatten, get me out of half. Hey, this looks good. Sit in that range break. I'm already in it with Holly. I'm going to double up on it here. Or I'm going to reverse a position. If I think it's getting toppy and I think it might back off for a little short play, we can do all that with just these one button clicks over here moving forward. Now, notice all of these are closed out because I had them automatically programmed to close out 5 minutes before the close. So the only two that are left open are Dove and Hal. Now, one thing to point out real quick here is if I just kind of push this guy down, looking at my Dove chart here, we can look at the field down here and see my stop price, 102.99. That is going to correspond perfectly with the red stop line, 102.99. We go over here and look at Hal, same thing, 1927. There's my stop loss right there. So based on tomorrow's action, or whether it was, pretend we were still open in the market right now, if I wanted to change my stop loss, I don't have to come, I could, I don't have to. There's many different ways to do this. I could easily just right click here and say modify my stop order. It's going to have selections for me, or I could just say, you know what, I'm going to enter the exact price. Or I could do it the really easy way, which is just grab my stop up here in the chart, move it up here, 1939, and now you can see it automatically changed my value here. That is now my live active stop. So you could adjust it manually if you wanted to, or you can just do the easy way, which is the way we've designed this. Just grab it on your chart, move it, and everything is adjusted for you. So easy peasy with the stops. That's also going to work in the same capacity with profit targets as well. So notice the way that I have Brokerage Plus pulled up, which is the way it comes native format when you launch it from new over here, Brokerage Plus. It comes in tab mode, right? I've got my positions tab. We can see all my positions. I've got my orders tab, which is going to show me all the orders, all the ones that got executed. Notice I'm on all statuses here. So if I wanted to, I could just say, show me only the filled ones. And we're only seeing filled orders, or active, right? Which ones are live? Only my two stops in HAL and DOV. Or, of course, we can put it on all statuses, but that's the way that we could easily parse and sort through any orders. Of course, accounts, typically most people are only going to be pointed to one account, but that's the way we could go through and see all of our orders pending and executed. Of course, over here we can see executions summary. This is going to show you how much buying power you're currently using, which is exposure long and short during the trading day. Did have a lot bigger short exposure earlier when I had all those shorts opened up. Of course, account, not a lot of magic happening there. And then we also have the Holly AI, all right? So earlier in the day, I know some of these positions down here that were in discretion were actually Holly trades. I think one of the little bugs that we have left to kind of ferret out here is these, instead of saying discretion, they should be showing the exact Holly strategies that resulted in the trades here. But that's how simple it is if you want to automate Holly strategies either in live mode or paper mode, is we would just highlight all these guys and right click and just say enable those strategies, and you'll see all of them turned on now. Okay, turn them off, we just do the same thing here, disable 26 strategies. Now also too, turning them off and on is one thing, but you also want to make sure that you right click in here if you do want to automate some Holly strategies in paper mode. And by the way, you can pick and choose just by individually clicking on them and enabling or disabling them. But you want to make sure that you go in here and you set up all your long trading instructions and your short trading instructions. So this is how you would do that. Once I right click and hit on edit Holly trading instructions, it's always going to show you which direction you're setting the strats up for. Make sure you're right on the right account. And then risk on mode, risk off mode, how do you want it to trade? Risk off, risk on, or best of, okay? I was actually dealing with a client earlier via email, and he told me, he's like, you know, I've been running Holly in the old school IB paper account. He's like, you know, I'm having a hard time getting the results to match up, all right? And so I pointed this mode out to him, and he was always just picking risk on or risk off. But I'm like, okay, you might want to trade this, and it will pick the best mode based on which one is performing the best at the time. So you guys are already probably familiar with the fact that these risk modes over here will change throughout the day based on which one is performing the best. So in AI trade mode here, if we're on best of risk on off mode, whichever mode is in play when that exit signal comes up, and that's the way that it's going to treat the trade. So if an exit signal is coming up, say Holly Grail is in risk on mode and a trade from Holly Grail is about to come up on the timed exit, if risk on is winning, then it's just going to let it ride. If risk off mode is in play, it's going to kick in the risk off mode trading rules as well. So don't forget about that one. Not only can you select risk off or risk on, but you can select the best of. And of course, we have position sizing. You can see here, I had mine set on based on the stop loss. Just get me as many shares as you can. But if I do lose on the trade and it stops out, only want to lose 30 bucks there. But you can see we can select fixed dollars or fixed shares as well. Order type limit. And of course, what's the other option? The old market buy or sell. You know, I could sit here and go over the risks of market buys, but I think everybody gets the gist there. You know, where it comes into play and gets really risky is in a fast moving stock where that spread might open up, and you know, running a market order, you might eat that big spread, so just keep that in mind. Whereas, you know, if we use a limit order and we're not very aggressive with our delta, we might not get the fill. So kind of the middle of the road, not using market, but not being, you know, not as aggressive on a limit, is using a delta with a pretty aggressive inside limit like we're seeing right here. So if we say limit and we say limit offset of minus, that's a little high there. I usually like to go minus 7 or 8 cents. What that does is that takes the signal price and then tax that much on top of it. So if it was a long play and the signal came through at say 15 bucks, and we've got a negative limit delta in here of minus 0.08, then if the signal came in at 15, it's going to use 15.08 as my limit buy price, and that's what it's going to use, right? And hopefully the stock hasn't moved that much, but let's say it's only got a 2-cent spread and it's 15.04 by 15.06, then I'm automatically going to hit that offer. You know, we are going to eat the 2-cent spread, but that's not that bad in today's market environment. So next best thing to running a market is running a limit offset with whatever you feel comfortable with. Some people like -5. If you want to be a little bit more aggressive, you take it up to 8 or 10. If you forget you know, which way is which, you can just reference the little key over here. Negative is going to take us inside or increase the price. So on the other side of the coin, if we went positive 5, then let's say the signal price came out at 15 and it's a long, then it's going to put our buy price in at 14.95. It's going to put it in less than the signal price. So in this case, positive is less of a price, negative is a more aggressive, higher price than the signal price. So it's kind of the opposite there. But once you get used to it, it tends to stick. All right, so this is how you would set up your trading instructions for the automated Holly strategies. Of course, this looks completely different than setting up trading strategies for ones that you would fabricate yourself. Lastly, the time and force down here is how long your order is going to stay out. In this case, 200 seconds. So that's a little over, that's like 3 minutes and 20 seconds, 180 seconds being 3 minutes. So you can set this to whatever you want. If the order is not filled within that time period, then it's just automatically going to cancel. Yeah, Vladimir, I see your question over there. Looks like Steve knocked it out. And smart route is typically the way most people are routing their orders through IB right now. All right, take a little look at the time here. We got just enough time to talk about a few more things in Brokerage Plus. So kind of got off topic earlier. We're working with Brokerage Plus in tab format right now. So we've got tabs for everything, positions, strategies that we have in here. But let's say you're not a tab person. Let's say you're a free floating window individual, okay? And that's typically the way I tend to lean. I'll probably set up a free floating window version of my Brokerage Plus before too long. But we can do that by going up here to new. And here's where we can spawn all the tabs. But if you're a window person, you can do the same thing by spawning free floating windows in Brokerage Plus. So we could do it this way by coming down to window and going, okay, let's set up a positions grid. Now we've got a free floating positions grid over here, all right? Nothing else is attached to the window. It's just my positions with all my execution buttons and whatnot. And then I could do the same. I could just keep on spawning free floating windows for everything that I wanted. So now let's get an orders window. All right, now I've got an orders grid. So, you know, this reminds me a lot of kind of some of the older school trading platforms. They were all windows, individual windows, not necessarily tabs. Tabs is more of a new thing for trading platforms. But in any case, if this is the way you want it to go, notice how you can create free floating windows for everything that you wanted. Have all your orders up here readily visible, so you don't have to flip back and forth between tabs. So any window that you see in tab format here can also be spawned just by going to window mode as well. So whether you're a tab person or a free floater, you know, you can get all these free floating windows set up, save your layout, everything's going to come back up just how you left it. All right, so that's how we would initiate Holly automation through paper mode. We know that we can click on any window and manually execute as well. But if I pop over here to strategies, here is where we can add strategies that we've created and back-tested with our backtester. So notice I've got my 250 short in here. I've got a couple of my turbo up and down alert windows in here. But if we want to add anything from our cloud, it's just as simple as right-clicking, load from the cloud, find whatever it is that you want to add to the party here. So I'll just do something at random here. Notice when I double-click on it, it doesn't add it initially. You have to select the option here, add to existing, okay? And that's definitely what you want to do. Be careful, because if you accidentally hit this one, it's going to erase everything that you have in there and then add that one. So be careful when you're using this little panel here. Add to existing, pardon me, at or above 15-minute or 20 period. Okay, so we just got done looking at the setting up trade instructions for Holly. But now when we right click here and go into edit trading strategy. Looks some of the same fields here, but a lot more things to configure here. Start time, end time up here, looking very similar to how we see these fields represented in the back tester. But we've got a few more options here to contend with. Send order even when holdings exist for a symbol, because think about this. You might have something in a long strategy that's live on your blotter. One of your short strategies triggers the same signal later on. So if you did have this checked, then in essence, if you were long something and then a short strategy issued the same symbol, it would get you short. But in essence, what it would do is close out your long if you were already long that stock, okay? So by default, this is not checked. You know, basically make sure you want this checked and you want that type of action. On the other side of the coin, if you're long something already, then say another long strategy fires the same signal, then it's going to double you up in that symbol as well. So just keep that in mind. We can throttle the strategies here by saying, okay, after 10 signals are filled here or 10 orders are filled, don't take any more signals from this particular strategy. Position sizing is going to be the same as what we saw on Holly. Entries, limit, with a delta works the same here. It just looks a little bit differently in this interface. Stop losses, profit targets, and trailing stops as well. So you can see a lot more options here when you import your own strategies versus more of a slimmed down version when you're dealing with the AI strategies and automating them. Matter of fact, with the AI strategies, if we pop back over here, it's kind of a one size fits all because we set up long and we set up short, and then it applies them to everything over here. All right, so any questions about what we're seeing here with Brokerage Plus, how to activate it, how to configure trade instructions, anything like that? What I will say here at the end is, let's say you want to clear your blotter out, okay? Well, when I right click here, I don't see any way to remove positions or anything like that. So if you want to clear out your paper trading blotter, what you have to do is you have to find the toolbar over here, and you have to, it's going to be a little clearer on you guys' version. I'm on the developer's version, so I've got all this development stuff, but it'll be as simple as this. You'll have an option to clear your paper trading account. Once you select that, it's going to say, are you sure you want to do that? Once I click OK, and if I come back up here, let's see if this works. Let's disconnect and reconnect, and boom, you've cleared out your paper blotter. All right, ready for the next session. So just keep that in mind. That is the way that you will clear out the blotter, by coming over here to new, finding it hopefully easily right here. Of course, you're not going to have all this other stuff to dig through here. Okay, paper trade with a replay of the day's action. Could we possibly paper trade with a replay of the day's action, allowing us practice later in the day? Can we possibly paper trade with a replay of the day's action?
It's a tool that Thinkorswim has and other tools have to replay the market action, and then you go back and react.
I gotcha.
It's like a simulator, a different type of simulator.
That would be cool.
Probably coming. It could be coming at some point.
Yeah, that functionality is not resident in the system currently. But yeah, I could totally see how that would be a useful tool, because, you know, it simulates real time and acting before the thing actually plays out. So yeah, Jeff, that's a good question, and we'll definitely put that on the we'll put that on the to-do list or the wish list for sure. In the meantime, you would have to do the recording yourself, which is a bit cumbersome. So all in all, just get in there and start mixing it up with the paper mode. It's going to be a great learning tool. And what I will say about this, and of course I cleared my blotter out, but you know, kind of circling back around to the learning aspects and not really worrying about what the P&L is going to look like at the end of the day, when I saw these compare account readings here, I'm thinking to myself, well, we don't see these biases like this very much, okay? So on a short strategy today, would it be better to to invert those? And of course, today that was the path of least resistance. And of course, I cleared my blotter out. But the interesting thing was that 2 different times I had a chance to exit that blotter with a pretty decent profit. I just decided to let it play out and see, okay, indeed, if we are going to trend up, then this blotter should look worse by the end of the day. And that's the way things played out. So keep in mind, when you're demo trading and you're experimenting with the P&L, just let it play out. And the more you do these types of exercises, the easier it's going to be next time you see, whether it's a compare account reading or whether it's a technical chart playing out on the daily, on the longer term, or the bigger indices here. It's going to act as reinforcement and letting you remember, yeah, I've seen this before. Matter of fact, I remember when I had a blotter full of stocks and this did this and then this acted in this capacity, which led to this. So get in there and start experimenting around, and it can only lead to more knowledge, trading knowledge to be specific. So that's about all the time we have today, ladies and gentlemen. Don't forget to download that beta version. And Scott, if you're ready to take us on out of here, we're ready for you.
Thanks, Jamie. Yeah, let's a couple announcements on the way out. We've got that summit coming up this Saturday. If you're going to be in the San Diego area, I think there's about 5 or 6 left. You can use that code to save. Just go to trade-ideas.com/summit and show up after you get your ticket. If you can't come, and you really should watch it though, go to trade-ideas.com/livestream and make sure you get the watching instructions to see the summit. And the wrong slide there, but I guess that's.
I'm sorry, Scott.
Yeah.
It was out of place. It was out of place.
Yeah. Move the other one. Yeah. So like I said, there's still a couple tickets left. Go to /summit to get that, and if you can't make it, go to /livestream, which you should do, so you get the instructions on how to watch it live, and also you'll be able to watch the replay immediately following the conference's conclusion if you miss anything. We have a set of ebooks. There's 3 books, 2 chapters each. Jamie and Steve each contributed some chapters. Check them out. They've also got cloud links to layouts or scans in them that coincide with the chapters and what they're talking about. They're organized by subject. Just go to trade-ideas.com/setup and put in your email address to get the downloads. We've got a podcast we release weekly, almost every week. So search for Trade Ideas Podcast wherever you listen to podcasts and the app that's your favorite, and just click on the subscribe button and get that fresh podcast delivered to your phone, tablet, or computer. You can use the code SUMMEREND because it's past the end of summer to save 15% on your first month or year of Trade Ideas, or on an upgrade from standard to premium, or on a purchase of the Brokerage Plus license, so you can auto trade AI strategies through Interactive Brokerage. So use that code. It's good till the end of the month, so you got about another week or so to use it and save on an upgrade or a new subscription. You can follow Jamie on Twitter at QuantBot. Steve Gomez is at TodayTrader. Also follow at Trade Ideas so you don't miss anything. Go to facebook.com/TradeIdeasPro and like our page to get updates on that platform and share them with your friends. If you have any questions, the best place to go is info@trade-ideas.com. That goes into our help desk software and gets you the fastest correct answer. Thanks, Jamie. Thanks, Steve. Thank you all. We'll have the recording up later on tonight or tomorrow. So keep an eye out for that.
Yep. Thanks, everybody. Thanks, Steve. Thank you, Scott. We'll see you guys tomorrow. Bye-bye.